Hi everyone, welcome to P-Bolic Notes. Today is Tuesday, February 22nd, 2022. My name is Michael Kirkchin, and I'd like to welcome you to my channel. The purpose of the video today is I'd like to share with you a very interesting email that I received from regarding on-chain analytics from Glassnode. And the analysis they've done is excellent. And I'd like to kind of give you my 2 cents worth on it, and to see how this thing plays out over the next couple of weeks as far as Bitcoin is concerned. Before I get started, I'd like to clearly state I'm not a financial advisor, and this is not financial advice. This is just me explaining to you why I hold Bitcoin, and also kind of giving an idea about where I think it's going to be going over the next little while. And then in a month, 2 months down the line, I can look back with you and see if our analysis was done properly. So let's get started. I'd like to share with you my computer screen so I can show you what the Onchain analysis said. So Glassnode is an excellent source. They're very good with giving details for analyzing what's going on with all the on-chain as far as the cryptocurrency is concerned. There's something that I wish we had in commercial real estate. If we had some sort of information source like this, it would make my life so much easier as a commercial broker. If I look at this, what they said here in their newsletter, they're saying that the Bitcoin bulls are facing a number of headwinds, and then they're saying basically over 4.7 million of the 21 million Bitcoins are held at an unrealized loss. So basically, that's basically 1 in 4 Bitcoin, which is quite a bit. And what they're saying is that the Bitcoin markets have continued to struggle with prices trading from the weekly highs of $44,000. And if you just look at kind of where it's at today, Bitcoin's price is right now it's hovering at something in the range of 38,000 US dollars. And if I just compare this to the actual total crypto space, if you look at what's going on with the total cryptocurrency market cap, so if we go back here to November of last year, it was at really $3 trillion, and now we're at the range of 1.7 trillion. So obviously this has been a catastrophic drop for the entire crypto space. It's down almost 50%. So, and if we look at what's going on with the moving averages, we see that we're below the 50-day, the 100-day, and even the 200-day moving average. So this is definitely bearish territory, especially when we're below the 200-day moving average. So it means that this is not a booming market. It looks like once we cross this January 5th 200-day moving average, that made it basically a bit even really bearish. So from this point forward, it became very bearish as of January 5th. So I'm going to move these charts away just so we can go back to this article. And then what they're saying is that as the downtrend's deepening, the probability of more bear markets can be expected to increase, and i.e. there'll be more people panicking, especially retail owners and so forth, and selling. They're looking at also the 8-week price for Bitcoin. So it's obviously very accurate, and it's gone down quite a bit from something in the range of $57,000, $58,000 US dollars down to today, as we saw earlier, in the range of $38,000 US. And then as we go more lower, what they're saying is that the bull markets are identified as growing demand from users, and bear markets characterized by periods of relatively low network activity. So I guess what they're saying is that when there's low activity on the network side, then it's considered bear markets. Okay, let's fast forward a bit. And then they're also saying that the flip side for them is that they're saying that psychologically people are holding a losing token. They basically will sell, panic, sell, and then all of a sudden the retail non-experienced buyers will be not able to hold this losing position, and they get rid of it. And what they're saying also is that around 11% of the network has a cost basis of $33,000 to $44,000. Meaning that I guess it's basically, because they're saying here the flip side is that more than a quarter of all network entities are now underwater, and furthermore, approximately 11% of the network has a cost basis of $32,000 to $44,000, meaning that as we're hovering today around $38,000 US, we're right in the middle of there. And then the long-term and short-term holder losses are mounting. They're saying, and as far as as you go down to see what else they're saying here is that so for them, they're also saying that I want to go down here and say okay, so for them, what's this conclusion? Is that with a total of 4.7 million Bitcoin currently underwater and 55% of it held by people basically who are SDHs, what I mean, I guess, is that the short-term holders. So basically what they're saying is that since 4.7 million of Bitcoin are currently underwater and 55% of them are short-term holders, means that they're not going to be hodlers holding for long term. It looks like basically they're saying is that this is still a bear market and that this is going to be basically, I guess they're saying in the immediate future, they're not seeing much happening. Another source that I like also is Into the Block, which is another on-chain analysis source. And these guys are actually giving some very nice data that I think helps for us to analyze. So they're saying for Bitcoin, the current price is very accurate, around $37 US. And what they're saying is that in the money of, if you look at the actual addresses that they've calculated on chain with Bitcoin, they're saying approximately 60% are in the money, okay, of all the addresses. And they're saying 37%, so basically more than one third of all the addresses are out of the money. So meaning that they're actually in a loss position, and that approximately 3-4% right over here are right at the money, meaning that they're at the cusp of break even. So this is very interesting as we look at this, because we see that, I guess, really, if you look at the chart, and I'd like to kind of see if there's anything more that we have to see here around the price. What they're saying is that showing information for addresses that bought between 32 and 44,000. I mean, this is kind of irrelevant. Obviously, if they bought at those prices, that means these guys bought kind of at the high. And then it's as we look at the actual all the data that they have available, they're showing how basically if I look at all the data available, and if I come over here, basically as far as today is concerned, so right over here, we could clearly see on this chart that basically, as they described above, around 1/3 was out of the money and 2/3 are in the money. So that's great seeing that. It's kind of exactly what they described. Meanwhile, if we go over here to 2016 and 2018, we see that almost everyone was in the money. And that's kind of very easy to see, because if you go here, we realize that from, like, if you look at this period here on August 24th, 2015, and if you look at the actual chart of Bitcoin, what happened there on August 24th, 2015, right over here, right? So from this point onwards, Bitcoin went from that point, it was at around $200 US. And then all of a sudden, we fast forward approximately 2 years, and it went from this point to this point. It went up basically from $200 to $20,000. So people became multimillionaires over here. I mean, really, if you look at what that means on a dollar basis. So as far as the ROI was concerned, so if we look at somebody buying Bitcoin at $200, and then at the end, after a 3-year period, really from 2015 until 2008, not even, I mean, it was late 2015. So in reality, it was going until early 2018. So really in the 2-year period, it went up to over here, we're talking about $18,400. So at 18,400, and if you look at this this difference, so this is a phenomenal yield. Obviously, if you look at the actual, if someone's doing the number crunch to see what it's at percentage-wise, so this is a percentage-wise, this is a 6,033% increase. So 6,033% increase in over 2 years. I mean, meaning that basically it's mind-boggling stuff. S&P 500s, I'm not sure when was the last time S&P 500 did 6,020% over the 2-year period. But you see, if I look at what happened here, I mean, I did triangles with Bitcoin just to kind of show what the way I'm seeing it is that, so in 2015, 2016, so it looks like it had this period of kind of like going really having this resistance from going from support to resistance, and all of a sudden breaking out. And afterwards, it looks like it did kind of the same thing right over here. So you see this window here took from approximately, let's say early 2015 until late or October 2015. So that was almost a year before it had a breakout. If I come over here, it looks like this resistance basically and support struggle until the next breakout. It went from August 2017 until April 2019. So kind of, let's say, really it was a 2-year window of its kind of struggling and going into bear market territory before having a breakout upwards. And then the next one was from January 2019 until right over here, approximately June 2020. So that was really like a year and a half again, over here, year and a half. So, and then he had this nice breakout as well, because then all of a sudden we see that it from July 2020, it was at around $9,000 until right over here until March 2021. It went from 9,000 to 60,000. So that really was really a six-fold return for the investors. Again, this was phenomenal as a yield. Doesn't compare to what we had here, but still it's a great return. But if you look at since then, if you look at from January 2021 until here February 2022, so really for the past year and couple of months, it's been kind of like just like struggling and staying in this corridor from $30,000 until something like in the range of $66,000 US. So that means that if I look at this properly, I don't see it. That means that we're still not sure when the next breakout is going to be. And if we look at where it's at right now, if I focus in to see where we're at as far as the 20-week SMA and the 21-week EMA, which is right over here, we see that we're still well below that, and it looks like we're having a struggle in breaking that. So I like that indicator a lot. I learned about that indicator from Benjamin Cohen. He explains how important that indicator is, really, especially for Bitcoin. And since we're struggling to pass that, it means that we're still kind of in this, I guess, in a struggle from support to resistance until we have the next breakout. So all the guys right now, as we see here, the volume is very, very strong, and it does compare to me. It does compare to what they had in these periods as well. So what that means is that when you're giving us these indications on the on-chain analysis, stating that that basically the volume is weak and so forth, I don't think that's very accurate. So I believe that whoever is getting rid of their Bitcoin at this stage, they may be missing out the next breakout. So obviously, who knows? This is not financial advice. Do your own research. But I'm very curious to know how this thing plays out. So personally, the way I would see it is that as long as we are staying in this territory between this band of, let's say, 30,000 US to 6,000 US dollars, 65,000 US dollars, we're kind of still in this triangle formation. And once we have a proper breakout upwards, then it's going to be very bullish. Of course, there could be also a catastrophic issue if it goes the other way. Obviously, then that's not a good sign. If you start going, let's say if Bitcoin has a meltdown going this way, that wouldn't be good. So that's why I'm paying close attention to what's going on over the next couple of weeks, couple of months, to see how this thing breaks out. And obviously, all of us who are bullish on Bitcoin, we're all hoping to see the breakout happen in this direction. So this is to follow. We'll keep close attention on this, and I'll make another update to this in a couple of weeks, couple of months, to see if there's been any updates to our charts. Thank you so much for watching.